Hey there, it's time for a Kenny's Clip update on 5 different items here. We've got the jobs report, which was out today. We've got the Fed, the new Kevin Warsh, leader of the Fed, private credit, AI, and of course, real estate. So we'll start with real estate as usual. The market is continuing at its 40-year lows of number of transactions. It continues to transition into a buyer's market throughout more and more of the country, and prices are reluctantly starting to slip. We're hearing from Zillow, who just came out with an update with prices dropping in more areas. Redfin's starting to finally report it. And it just takes time because sellers are in denial. And the reason we know that sellers of existing family homes are in denial is the fact that a new home is cheaper than buying an existing home. And that's a very rare occurrence, as we've talked about in the past. And that's due to the fact that the builders can control their pricing and are much more willing to cut prices to move inventory and reduce their margins as needed. So that's what they've been doing. They're sitting on very high inventory levels and are cutting prices, offering 30-year mortgages at 4%, et cetera. Whereas the existing homeowners are still begrudgingly lowering prices in various markets, and in some markets not doing so, and then just withdrawing their house from the listing, and that's going to end up hurting them. I believe that the market's going to continue to drop in pricing over the next few years, and particularly in the South and the West. That is already showing weakness and is showing some pretty substantial changes in pricing. So, and the Midwest and the Northeast are starting to turn. So we're seeing that slow down, and that's normal. The price to income ratios are all messed up, and people can't afford houses, so prices will come down, or income's got to go up. Which that brings us to the jobs report and incomes. That came out today, was a bit disappointing with only 57,000 jobs created in the month of June, and much less than expected, about half, and revisions of about 75,000 negative revisions for the prior 2 months. So the prior 2 months, which appeared to be strong, were not so strong as we suspected, but the market is still in a no hire, no fire situation. So we've got an economy that's just plodding along. If it weren't for AI spending, we would probably be in a real recession, because the economy is really bifurcated with AI spending accounting for much of the economy's GDP, and the mortgage rates the interest rates that have been higher over the last few years have slowed the economy down substantively, and so we're in a situation that kind of the same old, where few jobs, wages are not going up, and the job market's certainly not expanding rapidly, despite what the Trump administration might be telling you. And it is just a plod along economy, with AI really sucking up a lot of the oxygen. So moving on to AI, it is getting interesting out there. Google sold $80 billion in a fundraising of stock in order or debt, to raise money for its AI spending. OpenAI has since pulled their intentions to have an IPO. SpaceX's prices have dropped. I expect it to go below the opening price of $135 a share. But of course, if they create a competitor to AT&T with and Verizon and T-Mobile for space-based cellular, that could change a lot of things. But anyway, that's a separate story in and of itself. So AI spending is gotten ahead of itself, and the companies that are doing it are starting to raise debt rather than using their cash flow, and that's an indication that we're getting closer to the end of the capex spending boom, which could lead to a slowdown in the economy. And if that starts causing other issues, actually today I just read OpenAI is talking with the Trump administration about a 5% stake, which is only an indication of weakness, not of strength. And that's why they've delayed their IPO. I think this funding for the circular financing that's been going on with NVIDIA committing to sell to Microsoft, which is buying NVIDIA chips, which is just the same dollars circulating back and forth and back and forth. That type of movement was very common, of money flow within a concentrated area during the internet bubble as well. So we're going to overbuild data centers, and the efficacy of the AI boom is hard to realize in the short term. It's always expected to happen faster than it actually does. Just like self-driving cars, they were expecting them to have been out there 5 years ago. So it takes longer. AI is going to run robots and all that down the road, but it is a process. Actually, some companies out there reported recently on CNBC that are starting to hire more people back because AI is requiring more hand holding than people had thought. So anyway, this also leads to private credit. And the private credit market is still in bad shape. It's not been talked about because the Iran war is all we heard about for months. And that's not over yet either. But it certainly is off the boil, which is good because we didn't need a supply shortage again like happened during COVID. So for various plastics and oil-related products throughout the world. So that's good that that's starting to drop oil prices, which is also, of course, going to slow the economy. The effect of that last few months, and that oil surge also got the economy front-running some orders, just like it did before tariffs took effect. And so I think that boom, that little boost we saw in the last few months in the economy may slow down as we have more inventory than we really need, as the economic struggles continue for the low end of the K, as you've heard. So the private credit market has not been talked about a lot, although the redemptions are still high. Blue Owl just had one that was only 38% of the people requesting their money back, and with a 5% gate, that only a small portion of actually get their money back. Apollo's had more issues. The line just gets deeper and deeper, and whether this turns into a bigger systemic problem, as it is a multi-trillion-dollar asset class between private equity and private credit, is up for determination. When there is a shrinkage in the credit markets, it can feed it on itself, and that could start making the private credit problem much worse if there is a real pullback in the economy or the stock market and the bond market, et cetera. So we'll see what happens on that. That's a story still in progress. And, we talked about it back, almost 10 months ago when it first started blowing up. So I don't think it's over. And whether it becomes much worse, we shall see. But the problem is if people are less investing in the new private credit stuff, that helps or that decreases the availability of money for new investment. And as money's coming out, then suddenly they have to sell their assets, and they have to sell their assets at current market value, which is much less than what they may have raised the money at. And so it's kind of like a Ponzi scheme. The less money that can go into private equity and private credit, and with people taking money out, suddenly they have to sell assets at a cash value that they didn't expect. And so that's why they have gates on 5% per quarter. But if there's no more new money coming in and they keep pushing out 5% every quarter, there becomes a problem with liquidity. And so that could continue to be part of a problem that happens down the road. So lastly, the Fed and interest rates and how that relates back to mortgage rates. Mortgage rates are still sitting at 6.5, 6.6. They softened a little bit today with the softer jobs report, but not much. We're in just a range. I think we're going to be in the 6.5% range unless the economy really does start to slow down. And then if that occurs, that's a problem in and of itself, of course. But so I expect Kevin Warsh is talking tough. And that's what really made the dollar really strong over the last several weeks, as we talked about last time. And that pushed gold down, silver down, and even the stock market has gotten a little bit weird about it. So gold is maybe have made a bottom in the low 4,000s, 3,900 range, as well as Bitcoin. Bitcoin hit 58, 59,000 recently. Maybe those have bottomed. We'll see if we want to get back into those, and I'll let you know if my indicators point to that. When it comes to indicators, I'm still have recommendations based on what I receive for my investment, not a recommendation for any of you, as this is not investment advice, but of being 100% in your allocation for stocks. and that has continued. That has not changed. There's been some weakness in the stock market, but not enough to show that we need to be selling yet. That could occur, and I'll let you know if that changes. And then I'm watching Bitcoin and gold and whether they have made a real turnaround. But we don't want to catch a falling knife. Like, we got out of Bitcoin at 75,000. It's down to 58 or 59 recently, and now it's up to 60 or 61. So don't want to be in those as they correct. I wouldn't be surprised. It's possible gold could go to 3,500, but if it continues to hold this $4,000 level, we may have made a bottom. And if the dollar continues to weaken, and because the jobs report's showing weakness, it may start to weaken. That could cause a buoy for stocks as well, and continue the boom in the stock market over time. So we don't know where this is going to go. Right now, I'm getting conflicting signals from multiple data providers that I subscribe to as to whether inflation is really turned around and going to continue to drop, and or if it's going to continue to be a persistent problem that is going to cause problems for the market. So we shall see where those resolve. Some indicators are showing deflation is the next quarter or month indicators, and some are showing that it's the opposite. So really a difficult time, but we just follow what the market tells us to do, not what I feel like I want to do. So like I said, when we went positive on stocks and I said, I really don't want to do this, but the markets went straight up from there. So just follow the indicators and follow the markets, and I'll keep you updated on all that. Hope everyone has an awesome July 4th. Go USA in the World Cup, and take care. No outdoor fires, please, anywhere. Take care.